Traders are answering your questions. First up, John in Oxford, Massachusetts asks Joe, are you still in Dunkin? Do you like it here?
I still am in Dunkin. I like it here. It has pulled back, but I believe this is an area where fundamentally and technically it looks good. There's a lot of momentum in the business model, which we like. Fundamentally, the momentum is coming from whichever way you would prefer to. How would you prefer to say espresso? Is it espresso or espresso?
Espresso with an S.
I'm going to go with you, espresso. In France, they say espresso. A lot of people in the U.S. say espresso. But I'll say it's espresso. Espresso is driving the fundamental momentum right now. 7.5% of revenue was espresso in 2018. Really? It's now up to 10%. So behind that is the competition that they're providing for Starbucks. On a price point basis, they are comparative to Starbucks, but yet, if you go in between 2 and 6 p.m., they're 40% less than Starbucks. So I suggest going into Dunkin' for an espresso between 2 and 6. You're going to like it. It's going to taste good. It's going to be 40% cheaper. It's driving revenues, and that's why I'm long.
I like a bargain, right, Pete? I mean,
love
40% off.
And I'm a coffee
beat that.
guy.
Right, exactly.
And you
Talking
also
to me, baby.
Dunkin' recently adopted Beyond Sausage as now part of their breakfast menu.
And that is not one of the reasons why I would be going there, but
personally.
Sounds good.
But, all right, next one for Aaron. What sector are you most confident to the upside for the rest of the year? This is from Joshua in Los Angeles. What do you tell Josh?
I think that you should stick with the tech sector. It's a strong secular growth story. We talked about the reasons why there potentially could be more volatility in the months ahead, particularly into a replay of the fourth quarter this year. And I think you want to really look for companies that have growth stories that are going to be consistent and persistent over time. And the tech sector, I think, not just because of the 5G adoption, which is going to drive more hardware sales, but also because of the fact that you are continuing to see companies outside of tech adopt technology and the digital enterprise in order to move their businesses forward. I think that that's going to keep a very strong earnings growth picture under tech. And so I would use the recent underperformance over the last quarter to get back invested in the tech sector into year end.
All right, this one's for Pete. Ready, Pete?
Yeah.
Sammy
Let's do it.
in California is wondering
Sammy.
why GDX is down so darn much lately.
You know, a lot of people would point to the dollar. I'd actually point towards the hedging idea. And I'm not a gold bug, but as you know, GLD, SLV, GDX, those were all huge players starting at the end of May all the way through until very recently. And now all of a sudden they've pulled back. I think as a hedge, I love them. In terms of why have they pulled back? Because the markets have gone up a little bit better. People are getting a little more confidence about what's going on in the market. So they're taking off some of that hedge right now.